Hello, hello, hello. Good morning, everyone. How's everyone doing on this fine Wednesday morning, nearly halfway through the week? Some critical levels getting tested overnight. Good morning, Patrick. Good morning, Jacob. Hey, Coco. Good morning. Time to buy the dip for a bounce. Well, there is a potential reversal pattern. Good morning, Anissa. Cheers, Andrea, and thank you for everybody hiding in the background, hiding out there. I appreciate the comments, though. Don't be afraid. Grand Rising, Christoph. Thank you again. I really appreciate everybody who puts in the comments. And by the way, if you are new here, please do consider subscribing, ring that bell, and hitting the likey Mikey button. All right. Good morning, Martinez. So, on the radar screen today, we have very little. Mortgage info came out earlier this morning. It's market's just ignoring everything housing related. Crude non-farm productivity, a little climb in that quarter over quarter. Unit labor costs coming in better. Little reaction to that. Now we got crude numbers and oil numbers coming out in about 90 minutes. And then we have consumer credit coming out this afternoon, but very, very quiet day. Remember, the only thing going on tomorrow, continuing in initial jobless claims. The big stuff is Friday with PPI. So will we see some more of a pause or a little corrective bounce going into PPI? Well, let's find out. Mega caps down slightly this morning. Tesla, potentially weak demand. German backlog getting burned through. Let's see, more China price cuts. So that's trading down about 239 basis points as we talk. In the sectors, energy up 26 basis points is stronger. You got just real estate, consumer defensive, consumer cyclical getting hit. You can see so far this week, everything getting hit. Healthcare is holding up the best so far this week. Fed Watch Tool still 77% for that 50 basis cut. This is stalled out here. I think it'll pretty much stall out here through at least PPI. But it's going to be that 50. But did I say basis point cut? I said basis point hike. If this one was a cut, oh my goodness. Well, that would be a pivot, wouldn't it? Oh, and still in greed mode. So, it's not dropped out of greed mode just yet. By the way, I did check on Campbell's this morning. Was a beat. They are still able, companies like for these core goods, especially grocery goods, able to still pass on inflation to the consumer. I think that is going to change drastically with some of the results next year. That's why I was really interested. So Campbell's is a gap up this morning. After the close, we got GameStop. Is probably the one most followed, but nothing here is going to really move the markets. Remember, it's tomorrow after the close that you got to pay attention to. And in terms of gamma mode, yes, still in negative gamma mode for the longer dated stuff. About 40% of the option volume now is with 0-day expiry, meaning it's short-term only. So stuff can really intraday swing a market, but your longer-term stuff has negative gamma, which can still back up towards this neutral gamma area, which is coming in about 4,016. That's your flip point. You also have the huge gamma wall at 4,016 and a minor gamma wall about 39.50. So those are your two key areas. Right now we're trading 39.33. All right. Let me get to morning dew. Dave. Hello, Charles. Hey, Charles, where are you located? Where's your exact location? Good morning, Royal Palms. Yeah, it's been a big year of negative gamma. Mike, do you think the oil numbers can cause a big move in the market? If so, how so? We'll take a look at oil, then I'll comment. All right, you're in London. Well, thank you for being here, Charles. I really appreciate everybody who tunes in. Uh, we got overseas. We got a pretty interesting mix. Now, overnight, we had that little mini double, which played out. This is why I like to use the targets. Played out, coming up here, and then rolling over again. Now, what does that mean? It also means, let me get back to the daily chart. We've talked about this for a few days now. The critical juncture, the 50, exponential, the uprising channel line, and the prior breakout level, which we've officially tested. Not yet an oversold, but let's just see what happens today. Why? I love when this happens. Hey, we got a potential bottoming pattern. Yes, this does qualify as still a potential double bottom. I'm watching pretty much this 39.38, 39.37 level into the open, because if we get above there, then I'm keying off of the double trigger. We also have that's 39.55 key level that we talked about yesterday, which we broke below and then became overnight resistance area after it completed that little mini double. So that's your key area, your specific trigger on a closing basis for the little mini double bottom is above 39.54. Or remember, if it's a momentum break, you can always trade a momentum with a retest for more advanced. 39.70 first target, 39.78.50 second target. Next target takes it back to the prior 62.5 retracement, the 39.86.50 area. So there's a cluster up there. Where does that fall in the bigger time frame? Well, that falls at the other end of the 4-hour rotation zone. You can clearly see the double here, the potential double here. Clearly see it. Now, just because you have that does not mean it even has to trigger. Could this roll over again into the open? Yes, but this is critical. This is critical. You can even see it on the 4-hour chart. You had little mini double top there forming resistance, tested with this spike high, emotional candle close here, retested back on the 22nd and held, and now retesting that area today. That's why I'm saying this is make or break, not necessarily for today. We could bounce, roll over. Once this level goes, you can see some significant downside because you're into the 22nd move Thursday, the 10th of November, CPI Thursday, the launch pad. That's where you're back into. So we have a little bullish pattern into the rotation zone. And we have a fair amount of overhead resistance. So if we trigger some bullish patterns, that's for a potential short-term bullish bounce. That's not something that says, okay, we're shooting for 4,100. That's not what that means. Especially with the rate hikes next Wednesday and then huge OPEX and CPI next Tuesday. You got a lot of stuff. It's not going to be boring. I do love when we get a highly reliable pattern. The NAS has triggered the horribly sloppy double top, but not, it's confirmed, sorry. It's not triggered it. It's confirmed it, but not triggered. I would at least need a 4-hour close below this level, this 11,465, preferably a daily close. But it is confirmed. And now we got to flip around the retracements. Is there a shorter term pattern? This is not a potential double in the NASDAQ. So specifically, I'd be watching the S&P. The NASDAQ, 11,590 area, just around here where it stalled out. We had a key level there before, and it's still, I'm just raising it a bit, 11,590, 11,591. If you're watching for any bullish plays, be very careful because this could also slam into the 4-hour rotation zone, and you don't have the same probabilities, and the NASDAQ's been weaker. So for bullish plays, I look to that S&P first. For rollover plays, I then look at the NASDAQ and keep an eye with that confirmed but not triggered potential or double top. Your bigger level up above there, the major key area, because yes, above here, above 11,590, you have a little clear path move from yesterday's sell-off, and this is on the 1 hours in advance clear path, and the breakdown zone is back to 11,749. So that's where I'd be up here. You know, I'd probably even step in front of that with the 4-hour rotation zone being in front of it. The Dow holding. Now this is a very critical level. I've updated on the charts right here. So you start breaking below about 33,470. You could quick trip it to 33,190. And then your next major support area with the rising 50s coming at about 32,950 area. So that's what I'm watching. Overhead, I will be watching the little highs made. And yes, the Dow, this is an easy one to spot. This is easy peasy. Triple cheesy. There we go. Taking it right to the breakdown zone. Into the clear path move. So 33,708 trigger point on a closing basis, and it could be a bounce back to 33,954. Nice little setup in the Dow. So the two key ones also, this trigger point is just above this prior support base, coming resistance. So now the two key for any bullish moves I'd be turning first to would be the Dow or the S&P. Russell, yes, little mini double after triggering the double top, but that double top is on a higher time frame. So does this double bottom, even if it triggers, change anything? No, not at all, because it would just be a little mini bounce in terms of the bigger potential decline that was triggered yesterday on the close. The DAX holding in their daily rotation zone still has more potential downside. Remember, this did not trigger on the close yesterday. So this would not be the first thing I'd be watching for weakness. For the first thing I'd be turning to for weakness would be the Russell, followed by the NASDAQ. Why? The Russell already triggered a topping pattern. The NASDAQ has confirmed a topping pattern. Let's see. Good morning, John. Yeah, an 11 squeezy. Yes, we need the lemon squeezy. Mike, what are your thoughts on trading the Dow? I feel like it does not get as much love as with the ES and NASDAQ, but the moves are sometimes cleaner. I personally do not trade it. I don't have any problem trading the Dow with great patterns. If there's a pattern in the S&P and Dow, I will generally gravitate towards the S&P first because it is more indicative of broad market. However, like if this triggers, the Dow has been one of the best holding up markets. So if this little mini double, sorry, I'm on the DAX. If the little mini double triggers on the Dow, you could get a nice little bounce. It is, I've been working with the Dow since what, the future since about 2008. S&P futures forever, but the Dow futures since about 2008, and I found them, there's decent liquidity. Get good patterns in it. It just depends. If you are more limited and can't trade multiple things or have a more limited account, the micro S&P would be the first thing I turn to, or micro NASDAQ. Depending on the pattern that's set up, that's where I would gravitate to first, and then the Dow. Notes rotating back up. Yes. Yes, this is very yucky, so it would need a daily close below here, but that would be the key mini topping pattern. It needs only a daily close because of it's really not good on the 4 hour. Target still 115.03, but stalling out at anywhere from that 115 to 115.03 is the area, and that does not invalidate the potential double top. So now on a trailing stop basis, this is also, we have the gap left behind. Now it would be like lower probability since the daily is in the way. So, but it's definitely utilized for a trailing double top from my perspective. Does that mean it has to trigger? No. We still have the final target on the bullish pattern to play out, which could get hit. Could get hit, but we do have a top of your pattern. You're welcome, Charles. Dollar index, as Coco was talking, the dollars, you know, I'm not, it doesn't. Dollar testing the 200 today from the underside and rotating over an outside bar. So keep an eye still on yesterday's low. It dipped below it a little, but this area, the 104.55 area, 104.54, is what I'm watching to see if it breaks down below intraday. Then for the short term, I hope everybody knows what I'm going to do. I found this on the web. Oh, stop. 104.36. Why? Because if we hold here on a closing basis, going to be watching for a low. We break there, then I'm watching for a potential double. Does that mean it's just a magical buy or no? But that would then be watching for a more significant dollar bottoming pattern. We do have waning momentum down here. And this is a very critical juncture. And so far this week is an inside week to last week. So the dollar could be setting up for a bottoming pattern. We've already chipped away at the rotation zone, so this is the first now. This is called the secondary move after testing the 8. VIX into the 50 to 62.5. So watching for a move back down anywhere in this area. If we start running through today's established high of about 23.73 will be key, and then I will shift to watching for those lows to break. If we hold this area, then I'm just going to be watching it short term, and your key support is roughly yesterday's close on the short term basis is 22.20. Crude, potential double bottom. Other than that, it was rallying up a bit more. This is a very key support area, but if we roll over and break today's lows, 72.75, quick trip to 71 to the second target on that longer term double top, 70 to 71 will be my target area for any short term trades. Let me get to spiders and Qs. Spiders 393.15. Still, your key spider support is 390. Trading pre-market 393. So any downside, I'm still targeting 390. Yesterday's close was 393.83. So any bullish market, that's the first target area. The next target area is 395, 395.11. You do not have any double bottom because the futures trade overnight. This does, and we don't use pre-market or post-market trading for the spiders or the Qs. So key off the futures. But then if you're keying off the futures and trying to play it, you have this clear path move to the upside, and I'd be focusing on the 1 hour rotation zone in the spiders. Remember, your key is 390. You break below 390, 387, and then you have the gap below. That's the uh-oh moment. But you'd also be breaking that key support. For the Qs, 280.61. Yesterday's close was 281.68. So that's the first target. Then I'd be utilizing 283.50. 283.50. And then the top of the 1 hour rotation zone, which right now is just behind 285, and you have nearly nearly an advanced clear path up here. The key areas again is this 283.50 to watch for a stopping point. Key support coming in at 279.17, and yes, you still have this. Just like in the NASDAQ, you have a sloppy double top, so watch for that to possibly trigger on a daily basis on weakness. All right. What else do we have? We went through the dollar index and some other stuff. Going to be watching for a potential mini double in the euro. So far holding the rotation zone up, but waning momentum in the euro and pound. Pound, going to be watching for a reversal pattern back to the 200 and the daily rotation zone, trying to rotate up, but I'm watching for a more significant topping pattern in that. Bitcoin, little breakdown, but nothing yet. It's still bouncing back in this very tight consolidation, so nothing's been changed just yet with that. If the market does rally, you might see a minor bounce, but your key resistance is back at 17,200 still. So nothing's major playable in there. Tesla, you have that potential weakness coming in. I'm just pulling off these targets. Looks like it's going to invalidate them on the gap. So shorter term would be especially if we get some bullish market, would be the gap fill to yesterday of 279.82. But I'm watching, depending on where it closes, 170 below 178.46. That would favor the retest of the lows and the probable break of the lows. So that's what I am watching with cycles still rolling over, not yet to bottom. So it would not be any time to be aggressively bullish on this. The key, besides, let's see, what was yesterday's low? 175.33. So trading below yesterday's lows, your next support area, 170.28. I'm also going to bump these levels. Let's get the next bigger targets. If you do break down, not necessarily today, but below this 166.19, your next target cluster is about 157 to 155 to 157, and then 143. So that's where we sit. What do you mean, why are there no gaps in the spiders? There's lots of gaps in the spiders. There's tons of gaps in the spiders. What do you mean? There's gaps all over the place in the spiders. I don't understand your comment. There's even a gap down today in the spiders. All right. Trying to think. Carvana. By the way, this is the creditors are circling another gap down. This thing will be going into bankruptcy first. Would not be touching it at all. The creditors have signed in cooperation agreement, which means they're not going to fight each other. They're going to try to get the most out of the company that they can. This will be going under. I would not recommend touching it, even for bounce plays. Oh, see, I always put that one backwards. Now I was talking about Campbell's, which beat. And it looks like it's going to gap up. We had a reaction at the first harmonic. It'll pull back to the rotation zone. I'm just touching on this also so you can spot this kind of pattern, which we've talked about. Breakout, hit the next harmonic really nice, pull back to the prior breakout area in the rising rotation zone. You got earnings, which is the impetus for the next rotation higher, but your next cut key area is 55. And there's the open right now. Let's check in at the S&P. I just wanted to point that out from a pattern basis. So this pretty much holds going into the open. I'm going to jump in a minute, but I'm watching 39.40 as a pre-warning sign. We could maybe be running for 39.50, but I need at least that close. And given the nature of these markets, it needs to be like at least a 15-minute close above that 39.54. So that's what I'm watching. If it rolls over, pay attention to this low area established yesterday afternoon, 39.25 into the open. Then I'll be watching for that retest of those lows. With that, just let's glance at the tick. The tick, minorly negative, but remember, we've seen much more negative openings than this. So nothing significant, a minor negative broad market S&P opening. If you start seeing this, though, push down into the 1,000 area, start taking notice. Then some more substantial weakness is coming in. You're welcome, Chart. Do I welcome shorting Carvana? No, I just steer. If you weren't already shorted, I would not do it at this point, Martinez, because you're going to have people still rush in trying to bottom pick it and say, oh, well, it's not going into bankruptcy. It's now a story stock. It's not worth the reward to risk if you were not already short. You've missed that opportunity. You missed it actually a long time ago. Why? Because news could come out and say, hey, we're trying to avoid bankruptcy. We're doing a credit negotiation. We're coming into this binding. We're securing other funding. It would pop on that, but then I'd expect another rollover. It's just a matter of time. So you're trying to play a story stock. I'd steer clear of it. There's much better trading opportunities out there that are not story involved. Carvana still running commercials? I don't know. I haven't seen anything. Yes, Carvana is going to zero. So what are you going to do with all the car vending machine towers? Thank you for being here, Stafford. You're welcome, Anissa. You're welcome, Dave. Ramsafal. With that, I shall talk to everyone after the close. Thank you for tuning in. Bye for now.